So first of all, our members meet in groups and try and figure out, as former and current business owners, what is happening. And in recent weeks, we see this shift from monetary policy to fiscal policy. But normally when you have that shift, and the market always gets choppy when that happens, you don't have a $1 trillion deficit against wanting to have more infrastructure. One or the other wins out.
Right.
So when you add that in China and all the other things that have been on the show today, our members are concerned. It's not that they're bullish. They've created an all-weather portfolio to the extent they can. You know, they've cut back on fixed income because they're concerned about interest rates rising. Hedge fund exposure still low, and only 23% to the markets, over 50% in private real estate and equity, where they can roll up their shirt sleeves and touch and feel and see it.
This is their version of defensive then, I guess, huh?
Our members, when you build a great business, we have 650 of the top entrepreneurs across North America. When you build a great business, that's where the big score is. Now you're preserving wealth. You want to be defensive, but in a low-risk environment, you still have to take risk. So you're going to take risk where you have expertise. Owning buildings, building small businesses.
I'm curious, Michael, how does age impact their allocations? Because I would imagine that the younger members might still want to be a little bit more offensive as opposed to defensive.
So, you know, classically, you would say younger members have a higher equity output. That's not what happens. Our members have such entrepreneurialism built into their spirit. They're entrepreneurs till the day they die. They understand how the risk goes. But I was in a portfolio defense yesterday of a member who's in his mid-70s, still investing in new little companies because that's what he's been doing for 40 years. That's what he knows. And he doesn't care about the stock market. What he wants to know is this a great idea? Is it scalable? Can we make a success of it? If he has enough of those planted, one of those is going to take seed.
Good for him, still buying green bananas. So, but overall, what is your group buying in terms of the stock market here? I mean, I saw you still like Amazon, for example.
Yeah.
Right?
Where else can you get a shopping center on a desk? It's still the best place to do it. And the tech stocks are unique because of their scalability. That's what's attractive. Obviously, Facebook is running into some real headwinds.
I was going to ask, are you worried about what's going on there?
You got to be. You got heavy regulation and all of the condemnation, but Google doesn't have as much of a bad rep today, but it's still facing privacy regulation in Europe that's going to happen in California. But Apple, solid as a rock at this point, and you know, if you believe in the interoperability of its systems and the quality of its units, the member who did the portfolio defense yesterday owns Apple for 10 years. His cost is still a fraction. He doesn't care that it's, quote, in bear market territory. He's still up for the year. It's been a good year. So he's a long-term holder.
And your members like healthcare, the best in terms of sectors.
Yes, you know, it's been the gift that keeps on giving. If you cure cancer in good times or bad, you're going to have a winner.